Am I live? Yes, we are live. Hello friends, good afternoon. Just a moment. Yes, we are live still. Yes, we are live. Okay, good evening. How are you all? So today we'll be doing a special class, okay, as a part of our sessions. Today we'll be discussing completely on accounting concepts, friends. Okay, very interesting, and my most favorite part of accounting is accounting concepts, because we'll be learning a lot of aspects, friends. Lot of aspects we'll be learning. Okay, as a part of these concepts, already along with our journal entries, we have already learnt one. If you remember, separate entity concept, we have already learned that in depth. We have learned, correct, Amma? Similar to such concepts, we'll be covering almost some 5 to 6 more concepts today. Okay, I'll be making accounting concepts into two parts. Okay, Amma? Today and tomorrow I'll make in 2 parts. I'll ensure that I'll give you maximum information, because what are the theory questions that usually ICAI will ask for your accounting, from your accounting, majority will come out of today's and tomorrow's session, friends. Theoretical questions. Okay, Nama? And this theory discussion will stand as a base for many other chapters as well. In many chapters, I will keep on telling you, hey, if you remember in accounting standards, we discussed that. Now, remember all of you, I'll just keep reminding you about today's and tomorrow's class in almost next every chapters that we discuss. So ensure that you are paying 100% attention and give your best in listening, understanding, writing and practicing today's session at any cost. Right, friends, let us start our session for today. So we are discussing about accounting concepts. So let us jump into the notes, and one by one I will start writing, friends. So you also can make a note of them. Okay, I will not give you the list, but instead I'll just keep the heading accounting concepts and conventions. Sir, actually, what are these accounting concepts and conventions? Let me give you a small understanding about what actually these concepts and conventions are all about. Okay, now on our earth, friends, you go to whatever be the corner you want. To whatever be the corner you go. Let it be in India, let it be in US, let it be in Europe, let it be in UK, Australia, China, Pakistan, everywhere, wherever you go, friends, everywhere accounting is done in a very same way. Accounting is done in a same way. Sorry, I'll say accounting process is done in a same way, friends. It means, first we already understood that we will write first journal entries, from there we will post into ledgers, from there we'll make a trial balance, from there we prepare our final accounts, correct, Amma? So these are procedure, these are accounting process. You know something, wherever you go on this earth, let it be India, Australia, UK, US, everywhere, friends, wherever you go, this process is the same. No change. Only thing is that the softwares that they use may change, terminology may change, but our journal entries, ledger posting, this process and debits and credits will not change. Not only that, all the accountants across the globe, they have come across these concepts and conventions, and all of them prepared something called GAAP, which means generally accepted accounting principles. Generally accepted accounting principles. Okay. Now, as a part of this generally accepted accounting principles, the name itself is telling generally accepted. Who are generally accepting, ma? Everybody on this earth. Everybody on this earth, whoever are doing accounting professionally, they all agree, they all accept these generally accepted accounting principles, and they do accounting in that way. And this gap only is actually discussed in the form of concepts and conventions. What is actually gap? We discuss about the gap and all in the form of concepts and conventions. Got it, friends? Now, as a part of it, there are so many concepts, friends. Approximately about 15-16 concepts are there, and that already I covered one already in our basic class, in our first journal entries class. It means class 2 in this series we have already covered. We have covered our what do you call that, separate entity concept. Okay, separate entity concept, separate entity concept, legal entity concept. So those things were already covered in that second class itself. We have covered one because situation has demanded there. Now other concepts, today and tomorrow at 4 o'clock we will have sessions on these. Okay na friends, chalo, let us start with that. First of all, we have, as per our concepts and conventions, friends, we need to understand first something about something called fundamental accounting assumptions. Okay, Nama, we have to understand something called fundamental accounting assumptions. Sir, what actually these fundamental accounting assumptions are all about, sir? Listen very carefully. So what are these fundamental accounting assumptions? The name itself is telling it is those are some assumptions that I will assume. Those are aspects which I will assume regarding what? Regarding accounting from a most fundamental perspective. Okay, sir, what is the meaning of it? I'll give you some examples, try to understand. Imagine you finished off your class 12, okay, and you entered into degree class. Okay, first year BCom, you have entered into first year BCom. Try to understand my example very properly. Okay, as soon as you enter in your classroom, there are about 30 more people. There are 30 more people already sitting in the class. Will you go and ask everybody, hey, did you also pass 12th class or intermediate or PUC? Did you also pass? You passed? Hey, everybody passed. Will you ask everybody? They'll all laugh at you. Why? Because if they are sitting in degree first year, it's a basic assumption. Basic psychologically we'll assume that they already have finished off their intermediate or PU or degree, PU or class 12, and then they are sitting into degree first year class. Correct or my friends? It is not, you need not tell them, you need not ask them. Understand, you need not tell them that you have passed PU or class 12, or you need not ask anybody that have you passed 12th class, because fundamental assumption, fundamentally I'll assume that if a student is sitting in degree first year class, it means he or she has already passed, he or she already passed intermediate or PU or class 12, they have passed, and then only they are here in degree first year class. Correct? This is my fundamental assumption. So these fundamental assumptions are something, which by everybody by default they will assume. By default they will assume. For example, if you wear a stethoscope and going on the road, okay, or sitting in a place, everybody assumes that you are a doctor, because just by seeing that they understand and they assume that you are a doctor. Fundamentally they assume that way. If at all you wear khaki with all that cap, police cap and all these things, everybody assumes that you are a police. Correct, Amma? Okay. If at all you go in Khaddar, everybody assumes that you are a politician. Correct, Amma? Okay. If at all you are going in school uniform, as if everybody assumes that you are going to school. What I'm trying to say is, everybody by default will have some sort of assumptions. We'll assume few aspects. We will assume few aspects in our life. Correct, Amma? Similarly in accounting also, we assume. You need not tell or you need not ask about this, but everybody by default will assume that you are following some fundamental accounting assumptions. By default you are following, that's it. Understanding, friends? By default you are following. So what are those fundamental accounting assumptions, sir? Those are, first one, going concern. First one is going concern. Second one, accrual system. And third one, consistency. Third one, what ma? Consistency. These three are called fundamental accounting assumptions. So what does it mean? I assume by default, whether you do not tell me or whether I do not ask you also, I will assume. What do I assume, sir? You are following going concern concept, you are following accrual concept, you are following consistency concept. By default, everybody assumes that you are following these three. Now let us understand about each and every aspect of these fundamental accounting assumptions. Okay, so what is there inside them? What is going concern? What is accrual system? What is consistency? Already about accrual system, friends, I have already discussed. We made a complete one lecture on accrual system, friends. Please go and check my channel. On my channel you will find principles and practice of accounting chapter, not is a chapter, accrual journal entries I have discussed as a separate video, friends. Please go there and refer and ensure that you are studying from there. I'm not going to repeat accrual system because it is already covered. Okay, Nama, I've covered. I've spent enough time in explaining what is accrual concept. I've explained journal entries relating to that. I explained about the ledger postings related to that. I've even explained you the final accounting part of accrual system also. Everything has been explained. Accrual system dealt in detail. Almost 2 to 2.5 hours I have spent on that. Okay, now friends, so I'll not spend more and more on time on that. But now let me go through going concern and consistency. Okay. All of you please put the heading mark going concern. Going concern. So what is my going concern, sir? The concern is going. Where is it going? It is not going everywhere, anywhere, it is there only. Fine. My assumption is very simple, my dear friends. I assume that the entity or the concern, it means we are talking about our business. Entity or concern will continue for indefinite period of time. Indefinite period of time. This is the meaning of going concern, sir. What did I say? The entity or concern, whatever be the case may be, will continue. It will keep moving on. It will keep continuing. It will keep continuing its operations. It will keep continuing its sales. It keeps continuing purchases. It will keep continuing using the assets. It keep repaying the liabilities. Everything will keep going on. Continue for indefinite period of time. Is it going to continue, sir? Yes, it is continue. How long? Even I don't know, sir. That's why I'm calling it as indefinite period of time. Definite period of time means what? For 2 years, 3 years, 4 years, 5 years, which we call it as finite, definite period of time. For example, if at all I say my organization will continue for 3 more years, sir, then the 3 years is going to be my definite period. Definite, pakka, definite period of time. But what is meant by our indefinite period of time? Indefinite period of time. How long it will go? I don't know. But is it going on? Yes, it will go. But how long? I don't know. Is it for 6 months, 9 months, 1 year, 10 years, 100 years, 1000 years? I don't know. But is it going to continue as of now? Yes, it is going to continue, which we call it as indefinite period of time. As of now, it is going to continue its operations. Okay, now friends, that is my going concern concept. Now, what if that going concern concept is holding good? What if that going concern concept is not holding good? Both I will explain you. Okay, Namma, let us understand this concept. For example, if I say going concern is holding good, for example, the concept of going concern is holding good. Holding good means what, ma? Yes, as of now I am going to continue my business. In the nearby future also I am not going to close my business. It is going to continue. Sorry, sir, holding good. Then what you will do, you will start showing your assets value as well as your liabilities values at just book values only. You will show whatever be the values that is there in your books, same value you will show. The value of your assets also, liabilities also, both you will show in book values. At book values only you will show. Sorry, sir, what if going concern is not holding good, sir? Chalo, that also we will see. If does not hold good, does not hold good, what will happen? If it doesn't hold good, then you should start showing your assets and liabilities at realizable values. This is most important point. What am I saying? If the going concern concept doesn't hold good, then you should start showing your assets and liabilities at realizable values. Sir, how will it not hold good, sir? Let me give you some examples, friends. If at all I give you some examples, you will be able to understand very easily. Chalo, listen very, very carefully. Okay, imagine I have a big factory. Capital 1 crore. 1 crore investment. I made a factory. In that, there is one machine which cost me 85 lakhs. What? Out of 1 crore capital, 85 lakhs goes to one single machine. Okay? Now, understand very, very carefully, friends. This point you should very carefully and you should have to understand. Okay. You have to understand this point very carefully. So, out of 1 crore capital, 85 lakhs, one single machine. Sorry, sir. Now, one day, fire broke out in your factory premises. Fire accident happened. Fire accident. Okay. Full factory smashed. Complete gone. It is completely ash. You know, wood, completely ash. Understanding, friends? Now, you had lot of confidence. Ha! Let it go off. I have insurance. Chalo, go and open insurance. Insurance is lapsed just yesterday. Just yesterday, insurance is lapsed. Gone. Insurance over. Fire accident, machine gone. Okay. Now, is there any chance for you to continue your business? Out of 1 crore, 85 lakhs is gone. You cannot even sell it for scrap also. It is completely lost. Can you sell it for scrap at least? You can't. Correct, ma? You can't. So obviously, I will say my going concern is affected. My going concern is affected. Then I will say my holding concern does not hold good, because in the near future, I am going to shut down my business. I'm going to shut down my business in the nearby future. Understanding, friends? That's why I'll say going concern doesn't hold good. Okay? Sorry, ma. Sorry, friends. Okay. Since morning continuous classes, it's been so tired. Okay. Chalo. Now, doesn't hold good. Okay, friends. Let me give you one more example. Okay. Imagine you are running a service organization. Okay. Oh, sorry. Okay. For example, you are running a transportation company. You have only one lorry. Okay. That lorry met with an accident, and insurance policy also lapsed again. Now you don't have money to buy another lorry. Okay. In that case, what will happen, ma? Your business will be completely closed. Yes or no, ma? Going concern is affected. Sometimes what happens, there will be organizations for temporary purpose. Temporary purpose means what? Say for example, two companies, some A, big builder, and B, big real estate operator. Both together, they would like to join hands and make a big project. Okay? A, B. Two people join hands and make some AB Ventures or something. AB Ventures. Now, what is the target of AB Ventures? Is to construct buildings, is to construct apartments, sell it, distribute money, tata bye bye. After that, there are no more any partners and AB Ventures will not be there. AB Ventures is formed just for 2 years or 3 years time, just till we construct the apartments and till we sell the apartments. Till then only it will be there. Apart from that, gone, close. Able to follow, my dear friends? So that is how you have to understand the concept of going concern. So here what is happening? It is having a definite period of time. 3 years, that's it. After 3 years, this organization will not be there. So going concern will be affected after 3 years for the organization. Okay. So every year we have to keep checking this. Is my going concern holding good or doesn't hold good? It means if it is holding good, you can start showing your assets and liabilities at book values. Normal, whatever be the book values that you have, at the same values you can show. But if by any chance, if you feel going concern doesn't hold good, if it is not holding good, then you should start showing your assets and liabilities at realizable values. Realizable values means what, ma? Realizable values means how much value you will realize, you will get if you sell them right away. If you sell them now, if you sell your assets and liabilities, for example, my machinery has been gone, so machine scrap value nothing, zero, gone. So what about other furniture, building, and all these other assets will be there, nama. Those assets must be shown at sale value. If at all you're not selling it, but if you sell right away, how much you will get, that is your realizable value. You should start showing your assets and liabilities at realizable values. That's the meaning of going concern. Okay, ma'am, it's an assumption. Now, what will everybody assume, friends? If you do not tell anything, your holding concern concept is holding good. By everyone default, they understand, they try to assume that you are going to continue your business. Everybody assumes that going concern holds good. Understanding, friends? That is the concept of going concern. Okay, going concern explained. And now let us see about consistency. What is meant by consistency, sir? When we talk about consistency, friends, what consistency tells us? What consistency tells us all about is, consistency says accounting methods or policies. What are with the accounting principles or policies you adopt must be followed consistently. Must be followed consistently. It means whatever be the accounting methods or policies that you adopt, you have to follow them consistently. Let me give an example. Sir, I hope all of you know about depreciation. When we are talking about depreciation, friends, we have a lot of methods for depreciation, right? So straight line method, written down value method, blah, 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 blah. So many methods are there. Now imagine, first year, I will follow straight line method. Which method first year? Straight line method. Good, sir. Fantastic. Use straight line method, sir. Okay. Second year, I will jump into written down value method. Second year. Huh? First year straight line method. Second year written down value method. Acha. Third year, I'll come to revaluation method. Fourth year, sum of years digits method. Now tell me, my dear friends, can I keep on changing my method like this? Cannot. Understand? Say for example, you have learned goodwill valuation in your partnership. Okay, maybe in your PUC, intermediate, or CSE foundation, somewhere you have learned goodwill calculation in your partnership. Goodwill calculation, how will you actually calculate my goodwill? Either based on average basis or based on capitalization method. In average profits, you have simple average, weighted average, super profits. Correct, Amma? Now tell me, while calculating goodwill every year, first year you will use based on simple average, next year weighted average, then next year you will again jump into super profits, then again next year this one. Can you do that? Cannot do that. Whatever be the method that you have adopted for the calculation of goodwill, you must follow consistently. Probably in your inventory valuation, you would have studied some methods like FIFO, LIFO, weighted average kind of methods. First year FIFO, second year LIFO, third year weighted average, then next year some other method. Can I keep on changing methods year on year? Cannot change methods year on year. Understanding, friends? What consistency is telling me is this: whatever be the accounting methods or policies that you have adopted, those must be followed consistently. For example, if you have adopted straight line method, keep following straight line method. Understand? If you adopted written down value method, calculate with the written down value method only. Don't change the methods in between. Don't change your methods and policies in between. That's what they are trying to tell. Understanding, friends? Sir, does it mean that I cannot change at all? For lifetime I cannot change, sir? Wrong. You can change it. You can change it, friends. In 3 different scenarios, you can change. If in 3 different cases, you can actually change the method or policy that you have adopted earlier. In which all situations, sir? If change is required by statute. If the change is required by statute. Statute means what, ma? Law. If your law says change the method, change the policy, you can change. You can change. Because it is the requirement as per law. Even if the change is required by accounting standards. If the change is required by whom, my dear friends? Accounting standards. Now, accounting standards, imagine there are some changes brought into accounting standards, and accounting standards asked you to change the accounting method, or whatever the method or policy you are following. Then also you can change. You can change. Okay. Next, if change can bring in better presentation of financial statements. If the change can bring in better presentation of financial statements. Sir, what is the meaning of better presentation of financial statements, sir? Imagine, I'll just give you one example. Okay, there are so many ways that you can say better presentation of financial statements can be achieved, but I'll give you one simple example. Imagine one asset I purchased for a cost of say 10 lakh rupees, ma. Okay, how much did I purchase for? 10 lakh rupees. Till now, over a period of 3-4 years, I have depreciated this asset by 3 lakhs. Okay, till now how much I depreciated, ma? 3 lakhs. Then what is my book value, ma? Book value is how much? 7 lakhs. It means in the books I am showing it at 7 lakhs. Okay, na, ma? Now, this is the this 3 lakhs I got. Imagine by following straight line method. Imagine I followed straight line method and I got a total depreciation of 3 lakhs and my book value is 7 lakhs. Okay, Namma. But what is the market value, you know? Market value. It is 6,25,000 only. How much is the market value, friends? 6,25,000. It means if at all I sell that asset right away, market value or realizable value in the market, if at all I sell. So how much will I get to my hand, my dear friends? 6,25,000 rupees only I'll get. But what is my book value? 7 lakhs is there, but my market value is 6,25,000. 75,000 rupees variation is there. But if you would have followed, if you would have followed, say for example, written down value method, your depreciation will be 3,40,000, okay, and 3,40,000, and your asset would have been 6,60,000, for example, 6,60,000. Okay, now tell me, is 7 lakhs close by to 6,25,000 or this one, ma? Definitely 6,60,000 is very close by to the real value, real world values. Yes or no? Exactly 6,25,000 achieving every year is not possible. But I will say, if at all you do accounting as per your written down value method, in case if at all you would have done your accounting as per written down value method, you would have got a very close by value. You would have got a close by value. Market value 6,25,000. If you achieve 6,60,000, close by to that, I will say you have better presentation of financial statements. I say you have a better presentation of financial statements. Understanding my point, my dear friends? That is the meaning of better presentation of finance. So if you feel that if at all the change can bring in, so from straight line, if you change it to written down value method, can bring in better presentation of financial statements. You can show the number much effectively. 7 lakhs, 6,60,000, which is close to 6,25,000. 6,60,000 is close by. So I will say, if at all you change from SLM to WDV, you can achieve better presentation of financial statements. Let me just check, are there any questions posted by anybody? There are no questions posted by anybody, friends. I hope you are all following. If you are following, just let me know in your comments, yes sir. If you just are following, just comment yes sir in the comment box so that I'll understand that you are following. Okay, Namma. If you are not understanding, say no. Okay, I accept. Okay, I can change. Okay, fine, friends. So I have a question here. The question is, if change can bring in better presentation of financial statements, I understood this example, sir. Okay, I followed it. But the question is all about, imagine statute and accounting standards. there is a dispute between these two, sir. For example, if there is a dispute, what is the dispute? My statute is telling me follow SLM. For example, I'm just telling you, okay, some law is telling you to follow Streitel method, but your accounting standards are saying follow WDV. Arey, sir, you are saying if the change is required by statute also, you have to change. If the change is required by accounting standards also, you have to change, you said. But statute is telling you follow Streitel method, and your accounting standard is telling you follow WDV method. Now which method I have to follow, sir? Whenever there is a dispute between statute and accounting standards, listen very, very carefully. Whenever there is a dispute between statute and accounting standard, my dear friends, statute prevails over accounting standards. Statute prevails over accounting standards. Understand? So if at all there is a dispute between both the recommendation of the statute and accounting standards, which one will win? You have to follow statute, then accounting standard. Sometimes the situation comes like this. For example, I'm just telling you, your statute is telling you to follow either straight line method or WDV. Okay, any one can be followed as per your statute. Any one of those can be followed as per your statute. But your accounting standard is telling you to follow, for example, only WDV. Now, choose WDV so that both are satisfied. Correct, Amma? Choose WDV so that statute is also satisfied, accounting standard is also satisfied. Usually we choose our accounting policies in that way. Not only for depreciation, for goodwill calculation, inventories. So many such aspects are there where we analyze, where we actually adopt methods and accounting policies. In all those scenarios, all those places, you are supposed to follow consistency as well. Understanding, friends? So till now we have learned three concepts in our fundamental accounting assumptions. Three concepts we have learned already. Accrual systems already covered earlier. It is there in my previous classes, friends. Go to my channel. On the channel you will find accounting standards accrual system class, friends, accrual system journal entries. And when you see final accounts, in final accounts, profit and loss account, where we have discussed, there also I have discussed much in depth of accrual system. There also please go and check. Okay, Nama, accrual system discuss in depth. I need not discuss it again and again because already those videos are available for you. Now, going concern, accrual, consistency. It means these are the things by default everybody assumes. Default assumptions. It means everybody assumes that you have followed. That's it. Understand? Understand? It means, let us get back to our previous example. We have discussed one thing very clearly. For example, if you are going to your degree first year class, all the people sitting there by default, what will you assume? They are all finished off their PU or degree or PU or intermediate or class 12. Imagine there is a student who did not complete their PU, still sitting in degree first year class. Now you have to tell the management, right? Otherwise, while getting your seat admission, your seat affiliation in university, there will be a problem if you do not finish off your PU. Correct, Amma? Obviously, you have to inform if you do not follow fundamental assumptions. You have to inform if you do not follow fundamental assumptions. That is where I am coming out now. What am I trying to say is, friends, if these fundamental assumptions, are followed, just shut up and keep quiet. Keep quiet. You need not advertise. Okay, it will be so awkward that on your first year or degree, okay, first day, first class, you go and advertise, hey, I finished off my PU. Okay, I have finished off my PU. I have done a good job. I am now in degree. My parents are proud of me. All these things, if at all you tell them, everybody will say, hey, sit down. All of us also passed PU. Did you get rank? No, nah. Shut up and keep quiet. That's it. Why? Because everybody does the same thing. Everybody passed PU, everybody passed 12th class, and then they are entering into degree first year. What is your greatness in that? There is nothing great. Just keep quiet. Sit aram se. Don't talk about that if at all you are following fundamental assumptions. Similarly, here also, accounting assumptions also. What will happen if at all you are following fundamental accounting assumptions, friends? It means you followed going concern, you followed accrual system, you followed consistency. Keep quiet. You need not advertise that I am following going concern, I am following accrual system, I am following consistency. You need not do that. You need not tell anybody that you are following. But in case if you do not follow, if you do not follow, then you have to make a footnote. You have to make a footnote along with reason. Why you did not follow fundamental accounting assumptions. For example, sir, going concern has been affected. You have to mention that going concern is affected because of this so and so reason. For example, machinery has been completely spoiled. In the absence of the machinery, it is very tough to continue your business. You have to write along with the reason why you did not follow. You did not follow accrual system. Why? Because in the industry practice, we follow only cash system. We don't follow accrual system. All the industry, all the operators in the industry follow the same method. Even we are also following the same method. You write the reason. Now, what is the reason that you did not follow accrual system? You have to show it. If you do not follow consistency, why? What is the necessity that you have to change the method this year? Is it the requirement as per statute, or is it the requirement as per your accounting standards, or is it the requirement as per which brought in better presentation of financial statements? What made you to change the accounting method or principle in middle of the year? That also you have to mention it very carefully as a footnote. As a footnote, you have to. Understanding, friends? Along with reason, you are supposed to mention. You are supposed to mention, my dear friends. Understanding, friends? So with this, I'll stop today's session, friends, because outside it has been heavily raining. Okay, heavily raining, and probably there is a chance that power may go off now. Okay, so before power goes off and before I stop in between the class, I want to stop it here. Please revise this session. Please go back and please go through my fundamental accounting my accrual system once again. Okay, go back to the videos, and please go back to second video, friends. Basic journal entries I've discussed, where I discussed about capital accounts and all these things in the name of separate entity concept. Those things also you please cover, so that by today 4 concepts will be covered. Tomorrow I'll ensure that at least 5 to 6 concepts I'll cover tomorrow. Okay, now friends, and remaining I'll cover it on Sunday. So that accounting concepts, majority of the theoretical concepts which will be a basis for your future discussions will be completed. Okay, now friends, please practice these things. I'll get back to you tomorrow at 4 o'clock evening. Thank you so much, friends. Bye.